second, huh?
What is VVA 3 and VVA 1?
Those are the ranks. So 1 through 4 right now are the ranks based on moderations that you've done, the testing that you've done to become vetted, to get on the map, all that kind of stuff. Veteran tangible benefit forms that have been submitted for VA loans to show what's being charged and stuff like that. It's accountability stuff, interactions, squad leaders, stuff like that.
Okay. All right, so we're live. Just FYI, sorry. People like the raw format of this, unrehearsed, get together and just figure it out type of approach.
Yeah.
So guys, if you're tuning in live, we're going to discuss VA mortgage, and I brought on a couple subject matter experts. They can give you their backgrounds on themselves. But these guys are going to discuss with you. We get a lot of questions on Battle Buddies about VA mortgage and what should I do. And one of the things that seems consistent is people are very concerned about getting a fair and equitable treatment on their VA process. So I'm going to hand this over to Glenn and Steve, and they're just going to chat. So if you guys want to introduce yourself and your background, Glenn, if you mind
Sure.
going first, that'd be great.
Thanks, Chuck.
And feel free to ask questions. And hold on, instead of putting this at the end, invite more vets so they can see this kind of information that we do daily for you guys, okay? That's very, very critical to get this information out so that guys get treated properly. Okay, I'm going on mute.
Awesome. Thanks, Chuck. Hey, so I am a new member of the group. Thank you guys for having me here. I'm located out in California. I own a small mortgage brokerage out here. I'm a Marine Corps veteran myself, and been doing this for about 10 years and heavily focus on VA loans. Of course, I have one myself and know enough stuff about them to get in trouble, right? But I know exactly what to look out for too. But I'm just happy to be here to help, to source questions, be really a resource out here. And I'll pass it off to Steve.
Thanks. Hey, Steve Brand. I'm here in Minnesota, which is where Chuck started Battle Buddies USA. Started in the mortgage business in 2001, and I've had a strong service and focus and passion for working with veterans since 2011. And it was at that time in 2011 when my mortgage business really shifted, when I had an opportunity to do a loan for someone who was putting 10% down in front of my desk. And he asked me about using his VA loan. He was a Marine. And I was telling him, no, let's take a look at this conventional loan. And he stood up, poked me in the chest and said, give me my damn VA loan. So it really put me on a quest to learn more about VA loans. And I learned that I was part of the problem. And 46% of veterans, at this time, weren't getting VA loans. And it was because of lazy and ignorant loan originators who wanted to do easier loans because they heard from their friends and coworkers that VA loans were difficult, painful, a lot of time, a lot of paperwork, appraisal process was terrible. So they were doing easier loans for veterans. So from that point, I learned that it was the best program out there. I learned how to do it. I also learned that there's a lot of specifics that can get screwed up very easily on a VA loan. It's a specialty product and you have to know what you're doing or you're going to screw it up. So that's been my focus. It's probably 75% of my business is working with veterans. I talk to local CVSOs here in the Twin Cities, work with veterans every day, and understand the program real well. I've met Chris, who brought Glenn in. Chris was going out hunting. If you know some of him on the group here as well.
Making me jealous.
Yeah.
Elk hunting.
And and I've got a program of what I called, actually interesting enough, vetted VA mortgage specialist on mortgagemilitarydirectory.com, which is a website. And then Chris and Glenn actually helped start a program years ago. You can talk about that real quick.
Yeah, so that's vetted VA, exactly how it sounds, .com. And we also have a Facebook group that is geared 100% towards mortgages, VA mortgages. It's a no solicitation, extremely similar to Battle Buddies here. No solicitation, no sales, pitch type stuff. It's pure information, and it's accurate from vetted experts. So they've had to go through hours of training with the actual VA guidelines. And there's realtors in there as well that have gone through the same testing. So it's one of those things where it's a bit of a boot camp, to be honest, getting through the testing. I've, got my real estate license in California, own a mortgage brokerage. This was hard to get through the testing, but a phenomenal resource in there for sure about VA loans.
So, hey guys, there's already some questions popping up in here over on the Facebook chat. So I don't know if you can see it too, Glenn.
Yeah. I'm pulling it up.
So
okay.
Yeah, actually, Brian Butler asked about the funding fee, and the funding fee that a lot of people don't understand. The funding fee numbers were just changed this year, and I'll go through them real quick. So if you're a veteran, you've completed 90 days of service, right, Glenn?
180.
90 in wartime, which we're still in.
Oh,
right.
180 in peacetime.
Yes.
So if you're active duty, 90 days, you qualify for a VA loan. If you're a reservist or guard member who has not deployed, you have to finish 6 years of monthly drill, and six credible years, and get 16 minimum points, which by the 6 years, you're going to have at least 16 points. Then you're eligible for a VA loan. So first time use, so there's different percentages for this funding.
Steve, let me stop you right there. This is a perfect example of the nuances of a VA loan, right? Yeah. Where there may be information out there where, hey, this is what the funding fee is. It's like, wait, what is your specific situation?
Yep.
Right. So sorry to interrupt, but it's like, this is a perfect example of that.
Yeah, it's literally on a chart. It's an X and a Y axis. Were you a first time use? Were you active duty? Were you reservist? And if you were active duty, and you're putting no money down and doing 100%, it's 2.3% for your first time use of the purchase price. Easy math, $100,000 purchase. You're going to actually have a loan, because 99% of the time it's financed, for $102,300. They're going to take that $2,300. We're adding it to the loan. And we lenders that close that loan. Essentially, we take the $2,300 and give it to the VA to continue to support the VA home loan program. That's my explanation of it.
Yeah, I mean, I would say that the best way that I explain it to people is that there's got to be some sort of hook with the VA loan, right? It sounds too good to be true with it being a 0% down loan, so no down payment. They have usually on average market rates are running anywhere from an eighth to a quarter better in interest rate, lower than your standard conventional type loan. There's no mortgage insurance involved, which usually that happens when you're putting less than 20% down on a conventional loan. So you kind of look at it and go, okay, so what's the hook? Well, you kind of have to pay the piper, and that's the VA funding fee. But as nice as they are, they will let you finance it to pay the government type thing. But
what's interesting is that even though the VA loan is a 100% purchase program, if people are buying their second and third home, you don't have to put no money down. Yeah. And as you put more money down, the funding fee gets smaller and smaller when you put 5% or 10% down. Mm-hmm. If you're using your VA loan, we're going to continue on this topic because it was asked about, a second time and you're going to 0%, it's 3.6%. So it's a little bit heftier.
A little bit more expensive, yeah.
But again, you're using the loan program more than your first time. We're going to continue to support the program. So that goes right to the VA. Now, here's the caveat. If you receive service-connected disability at a minimum of 10%, which almost 99.9% of the time it's a minimum of 10%,
yeah.
Then the funding fee is waived. So there's zero funding fee.
I'll tell you personally, I've probably saved over $60,000 in fees having my disability rating. Broke my foot a couple times, stuff like that. Like you said, a ton of vets have a disability rating. It's like, that's been huge for me and my family personally, is being exempt, what's called exempt from the funding fee. Because it turns it into a true straight 100%, 0%, 100% financing, 0% down payment purchase product. And again, one other huge asterisk with this, you guys, This is for a principal residence. You can't use this to start building a real estate portfolio with investment properties. Okay.
Or a cabin or a second home,
Yeah.
down south. I say down south because we're in Minnesota.
South of the Arctic Circle.
Exactly. Southern Canada.
Hey,
Brian just brought up a great thing too. Active duty Purple Heart. That is very true. I've done one of those as well. You have Purple Heart, shows up on your certificate of eligibility. You are exempt from the funding fee.
Yeah, that was just
thank you, Brian. Yeah.
Just started this year.
Mm-hmm.
Hey, so quick thing too, guys. So I know that's very state to state. This isn't necessarily directly it's not in the mortgage process, but a lot of states too have some exemption policies when it comes to the taxes on your home with your disability ratings. So I know Minnesota, I think it's 70, Steve, where they're tax exempt on property, primary residence, and that'll change state to state. So make sure
California
look at all these factors, guys.
Yeah, California is, if you're 100%, you get a break. Anything 90 and below, it's like your normal tax rates. Wow. Yeah, so some states, you're very right though, Chuck. Some states will prorate, right? Yeah. They're like, oh, you're 50%, we'll give you 50% of what the full exemption would have been. And this is property taxes we're talking about, guys. So that, those fun Zillow calculators and Redfin stuff, the stuff they're not showing you when you when you type in taxes, insurance, mundane little details that end up being very important to what makes up your total monthly payment.
In Minnesota and Wisconsin, we're right here on a border state with the Twin Cities. Minnesota, if you're at 70% disability rating, you're tax exempt for property taxes up to $150,000. Right. If you're 100% permanent in total, has to be permanent in total, then you're tax exempt up to $300,000. Here's the interesting part. They just made some changes last year so that you can actually apply for that before December. And here's a key part about that. Just because you don't pay it doesn't mean that you don't have to qualify with the payment because you don't own that property yet. And this is 99% of the states and lenders out there. There might be one here and there. Glenn, you might have heard of one that might allow exemption in qualifying, but usually
no.
Okay, so good, we're on the same page there. So for example, in Minnesota, you have to put your disability information in from your CVSO to the county, then get approved before December for next year's taxes, and then you'll get exempt.
They will prorate it later based on when you filed it, but you're exactly right. Yep. If the taxes were $500 a month, you got to qualify at that, even though they were going to be $200.
So if you buy a home in January, you're going to have to pay property taxes for the rest of that year. Here's the interesting thing is people get a little bit, on edge about that in Minnesota. You cross the border in Wisconsin, here's how the property tax exemption works over there. You pay it every month. Then you fill out your federal tax returns and you get a refund of it.
Huh.
So let's think about Minnesota and how blessed we are. Every state is different. So again, this is important. Why you work with someone who is local and understands the market instead of a headset jockey at a big box lender that's sitting in San Antonio, Texas, maybe.
That's a weird one to call out.
Or
if they were an admiral somewhere,
Detroit
cares about veterans with a tear in their eye and stuff.
Right.
Not that that's not an option, guys, but you got to do what's right for you, right?
Yeah.
I mean, Steve, we went to, was it about a year ago? We went to that conference. I mean, I could have physically choked you if I needed to, right?
Well,
I didn't have to fly to San Antonio like I used to. For the other mortgage companies to do it.
If you get not taken care of by someone who's local, you can chase them down. Exactly. So you got that going for you.
The very first loan I ever did in 2010, it was a VA loan, and the guy was like, "Oh no, I trust you. I know where you live. I'll just come burn your house down." And I was like, "Okay, I guess this is all right." So, there's that unique connection. So,
so here's kind of a vague question in there. And I think this might have been solved already with what does it take to get a VA loan?
Yeah.
So, you talked about the statuses. I think that's pretty clear. But Tim Withermood, if you've got a question beyond that, I mean, that guys, you did give the answer, right?
Yeah.
As far as,
The quick answer is if you are active duty, 90 days today because it's considered. Closed loan last month for someone who's actually overseas deployed. We had a power of attorney. Sister closed the loan for him. Just got another referral from local real estate agent for another veteran who's or active duty soldier who's overseas. We're going to get them approved into a home. They're coming home in October. They're going to come home to a home that they own. So
Awesome.
90 days active duty. If you're a reservist or guard member and you're not deployed, you got to finish your 6 years of monthly guard duty, get your 16.6 credible years, you qualify for a VA home loan. If you're a guard member and you're deployed on Title 10 orders from the president, not to Minneapolis a couple months ago for a couple days, that's not considered deployed. I've had a couple local guard members call me and ask me if their deployment for a few days qualified them for a home mortgage. That's not the same. So once a guard member's deployed, they qualify just like an active duty soldier for 90 days.
I think that stuff on the border a few years back was Title 10, right? On the southern
Not 100%
border.
sure. Was it bag and sand kind of thing?
A what?
Oh, not the border of Minnesota, Wisconsin.
No, yeah, no. Down in Texas, doing some border patrol with Homeland.
Just to add to what Steve's saying too, in case this was part of the question, I mean, a VA loan's just like your stock standard, either FHA or conventional as well, with your income, assets, credit, and existing debts. It's an income-based repayment loan. To qualify, Steve hit the nail on the head with what it takes to actually be eligible to qualify for the VA loan. You still have to have a job, have serviceable credit, have a little bit of cash for closing costs, whatnot, not be loaded down with a massive amount of debt. So that is the run of the mill for normal mortgages.
What's interesting is that the COE is a form that you need to get. Most good loan originators will get that for you as part of the loan process.
Mm-hmm.
And that is, if you have your DD 214, you can get that. Usually half the time, Glenn and I can go online and get it from our connections that we have. The COE stands for Certificate of Eligibility. If you listen to the words that Glenn said, I think that people in the mortgage industry would probably want to change that E to not eligibility, because we think credit and income, it should be certificate of entitlement. Right. You're entitled to the loan. Now you got to qualify for it, income and asset. There's a couple other questions on here. Matt Riggs asked about refinancing, if that's a supported program. Yes. You can do. There's two different types of programs. If you currently have a VA loan, the solicitations that you're getting in the mail that say IRRL, IRRRL, interest rate reproduction loan.
Interest rate.
It's a streamlined refi. No appraisal, no pay stubs, no bank statements. You get title work, you sign docs, you close in a couple weeks.
Yeah. Is that dangerous?
That's a great loan program. Go ahead.
Is that dangerous? It sounds like it.
No, there's some real hard stuff to keep from veterans getting taken advantage. The biggest one that has come in play the last couple of years is that the rate has to drop a minimum of 0.5%. And there's a recoupment period of 36 months. 36, is that right, Steve? 36 months.
210 days from the
No,
date.
I mean the payment.
Oh, yes, yeah.
Yeah, 36 months there needs to be a net tangible benefit to the veteran, meaning you can't get shoved into a loan, pile on a ton of closing costs, prepaid items like renewing insurance, taxes, et cetera. You end up with a much bigger loan, but a lower interest rate, and your payment's only $25 less a month. That won't fly. Legally cannot be done. So there's a lot of protections in there for veterans. And to that point, Chuck, is the way that I've always explained to my staff of like, well, why don't they have to look at income or anything like that is, well, the requirement of it having to drop 0.5%, the way that the underwriters are essentially looking at is, look, if you were making your payment with a 4% interest rate right now, chances are you're going to be able to make it with a 3.5 or lower payment anyway. So we're okay with not verifying the collateral, getting an appraisal. We're okay with not verifying income because they're obviously making the payment. This is a pure benefit at that point to the veteran of getting a lower monthly payment type thing. Because yeah, at first glance, you're kind of like, yeesh, that sounds a little risky.
Disclosure question.
Mhm.
because it'll come on a form eventually anyways. Typically speaking, I'm guessing that there's a percentage range of fees that are going to be rolled in. Is that something that's somewhat predictable to do that?
Besides the funding fee,
Yeah.
which that was the one thing we didn't talk about, right, Steve, was the Earl funding fee, the streamlined funding fee is not your big old 2.3 or 3.6. When Steve was saying subsequent use, meaning you were using it to purchase another home or in some cases take equity out of the home via VA loan, a Earl funding fee is 0.5%, 0.5%. So to answer your question, Chuck, that most times, 99% of the time, is being rolled in to the new loan. And then at that point, if there's the bandwidth of equity, right? Do they have enough equity? Equity being what the house is worth versus what you owe, to roll in, escrow title type stuff. If they needed to pay the tax bill, like in California, tax bill is coming out in October. Right now, the lenders want to see a 6-month installment paid. I mean, on some of these houses, that could be a $6,000 or $7,000 ad right now of, hey, let's get you a 0.5% lower rate. By the way, you got to pay taxes. You can come in with $7,000 plus normal closing costs. A lot of times, people will opt to roll all of that into the loan. Yes, their loan amount goes up sometimes $10,000, but as cheap as this money is, with the 2.5, 2.25% interest rates, $10,000 is going to equate to maybe $50 a month in payment when we're already looking at saving $300 a month. So it turns into, and I know, Steve, you probably have this conversation all the time, just like I do. Would you rather save $300 a month on your mortgage and come in with $10,000, or come in with nothing and save $250? And they're kind of like, is that a trick question? I mean, I would like to come in with nothing.
What's interesting is that we still have the 3%, 2-3% of people
Right.
who, it's a religious
Pay down
problem
the debt. Yeah.
with them to add more money to their mortgage balance
The
and
Dave Ramsey thing.
to set up escrows. And let's roll in closing costs, but I'll come in with a few grand to put my new property taxes and homeowners insurance because I'm going to get that back after I close my loan. So I have some people who do that. One of the interesting things that Glenn was talking about the net tangible benefit within 3 years, that's a little bit tighter guideline that the VA has put on in the last year or so.
Mhm.
It's made it, there's some negative consequences for that. Some guys who want to refinance down to a 15-year term, the payment doesn't go down all the time or enough to have a difference because it's all about the payment. We know that it's better for you from a perspective of gaining equity, but you're not going to be able to regain those costs if the payment actually goes higher in 3 years. So it's limiting some people to get go from a 30 to a 15-year term right now. It's something that they'll probably review and come out with a change in a couple of years.
Yeah. This again, perfect example of just all these little nuances, hooks, loops that you could find yourself falling into. Of you really need to work with an expert that knows the VA loans frontward and back. And if not knowing the answer, know where to go get the answer and know who to lean on to ask. I don't know everything about a VA loan. Steve doesn't know everything about a VA loan either. It's something, but we know we can lean on each other. If it's some weird thing comes up, we know other people in our network. We're not just be like, yeah, never heard of that. Sorry, next.
Here's
Yeah.
a good one.
And
Sorry. Go ahead.
Go ahead. No.
Forbearances.
Mm.
I think that's a slippery slope and something that needs some clarification. So these guys don't find themselves kind of being like, whoa, what's that at the end?
Yeah.
That doesn't make sense.
So I know I've seen a bunch of them. Steve, have you seen?
I've seen a couple in conventional FHA, VA.
Yeah, I've seen them across the spectrum.
You want to give these guys an idea what a forbearance is first?
So it's really, I'll tell you this, is it's going to be extremely determinant on who your current servicer is. Your servicer is who you're making your monthly payment to. Okay. We've heard them from as generous of, hey, we're just going to tack on these, let's just say it's 3 missed payments. We're going to tack them on to the end of your loan. So it's almost like a straight pause, right? If you had 100 months left on the loan, you just moved that scale 3 months down the line and kept making the payment. We've heard them as aggressive, and this is the one we want everybody to look out for, aggressive as of, yeah, you missed 3 payments. Then when you make the 4th monthly payment, you owe a balloon payment of 4 payments.
You gotta
That one
catch
doesn't
up.
help anybody,
Ouch.
right? Because here's the really scary part too is yes, it's supposed to report on your credit that you were in forbearance. Yes, it's not supposed to be a late payment, but we all know that that's how it's designed. That's not how it's always executed. 90 days late, you're eligible for a foreclosure, right? If you can't make that payment up, that balloon payment after 4 months, and something goes sideways, not saying it will, but something gets marked somewhere in the credit bureaus, I mean, you might have a sheriff's deputy knocking on your door a couple months later saying, hey, like you're in foreclosure here.
I've got two people right now battling with credit bureaus and their current servicer that were in forbearance that are trying to get lates that are to be removed. What's interesting is Glenn and I are in a couple different mortgage networks. And I mean, we've gotten together face to face and met in mortgage groups with meetings to continue to sharpen the blade and continue for veteran stuff or just general stuff a handful of times. And when March came out, when this COVID stuff and the forbearance stuff was first announced that it was going to happen, everyone in our industry that we're friends with were like, mortgage network, please don't do this. People, please keep making your payments if you can. Don't just do it because you can. And we're seeing now, in August, September, when people did that, what happened. And we're like, God, we told you. But people got to catch up. People, it's different. But again, it has to do with the servicer. Did we answer Matt Riggs? He asked about refinancing.
Earl.
We talked about Earls. And then he asked about cash out refinancing. One of the guidelines that changed last year with VA was that we used to be able to purchase up to 100% and refinance up to 100%. Last year, and it wasn't really the VA, it was Ginnie Mae who services loans, kind of, it's really deep into the weeds, but they limited it to 90% now. You can go over 90%.
I was like, you can still do it. It's just an arm and a leg.
You got to pay like 5 points.
Yeah, it's insane
to do it. So it's 90% is really the guideline. And this happened last year with a gal, and it was right when it was changing. Was we were in the process and we had to change it to 90%.
I think that's a perfect example too, Steve, of you get these mailers and stuff, right? Because rates are hot, slowest rates ever. Everybody that's on a list anywhere, myself included, we're getting hammered, right? Chuck probably is too, with just solicitations, right? Is they'll tell you, hey, take 100% out, all this. There's the fine print is where you get killed. The devil's in the details with this type of stuff, guys, where they're going to promise you the moon and they most likely can deliver, but it's going to cost your firstborn child, essentially, when you look at the cost of these damn things, you know? So it's just all these little nuances that you can get hung up on. And it's really just trust your gut. In all honesty, it's like if you're talking to somebody, you're like, yeah, it sounds like they're selling me snake oil or something, or just reading whatever it is, you're probably right. There is the bar is very low to get into this industry. I mean, let's be honest. It's not all that hard to get in and to train somebody to get on a headset and just start dialing numbers type thing. So trust your intuition with this type stuff. And even though they say they can do it, there's most likely going to be a hook somewhere else. Like make them prove it, right? Type thing. And that's why resources like Military Mortgage Directory and Vetted VA and Battle Buddies are here to lean on and ask questions, right? To say, hey, is this legit? Like, this sounds too good to be true. Or has anybody heard of this? You know, it's like, ask your peers. Don't be embarrassed, because you all know that if you're asking it, there's probably 20 or 30 other people wondering.
Probably
right?
45,000 in this group.
Yeah. Yeah. So
there's a lot of, I mean, you know, here's the thing I want these guys to keep in mind is you guys are in the industry. They do this every single day. A lot of people would consider you guys to be experts at this, and this is overwhelming for you guys. So when you've got a first-time buyer on active duty, you know, I was 22 the first time I bought a house. I didn't know what the hell I was getting into. And, you know, and I was 3 years in the software business doing mortgage stuff with one of these big, evil, giant clients that you guys are talking about down south in Texas. That's as far as I'll go. They treated me wonderfully, I have to say. I'm not going to complain. They were actually fantastic to me, but I also wasn't purchasing a mortgage from them either. And I can say it's really, it's an interesting perspective going from the big box guy, and being kind of like the nerd behind the scenes dealing with their technical people and everything else out there all day. I can tell you this, that they do have the best interest of the veteran in mind, but they have certain parameters that they have to stay within. And that's just
Bottom
how
line.
the world works for them. So,
Yeah.
when you get the boutique guys like what you guys have for businesses, it's a different world, and it should be a lot different experience. So, I get COVID's whatever and the mask stuff and probably more Zoom time than anything nowadays. But, you're probably not going to get a nice Zoom call like this with a mortgage broker who's in Salt Lake City, I'm guessing,
Mm-hmm.
So, let's see, we got one. I don't want to go too long on this. I was targeting 30. We're pretty on time for a change. That's good for me.
Someone was asking a question in the group about Homes for Heroes.
Yep.
Homes for Heroes is a program. There's a handful of other programs that are similar to it. The comment in here, I think, was by a real estate agent, is that they're actually a lead generation tool for agents. Yes and no. They haven't really. I'm a member of Homes for Heroes. With the focus that I've had with working with veterans since 2011, I expanded it to working with teachers and first responders, et cetera. And there's two aspects of the program. It's agents and lenders who've made a commitment to join this program, and they either give a discount or a rebate of their commissions to the veteran or teacher or whatever post-closing. You get a check in the mail. It's real money. It's not just a lead generation tool. It's actually something interesting. There's other things out there, and there's other lenders who discount. I mean, I discount my fees to all my loans, whether it's from Homes for Heroes or programs like that or not. And there's other agents who will give discounts and rebates to veterans or first responders or teachers, just because that's part of what they do, what they made a commitment to do. Just want to mention that. Any other questions on the thing that you've seen, Chuck?
I see one here. Need help with a VA loan, first time home buying. That's kind of what I expected a lot of these things being, these questions. And really what we'll do for that, Bradley, William, is I'm going to have both Steve and Glenn post the organizations that they run to help vets kind of get the water less muddy. There's a lot of mud in this water. So you can go there, get some amazing help from these guys. They've got the same mindset we do here at Battle Buddies, no solicitation, provide as accurate of information as possible and give you a lot of different perspectives. So both of their organizations are highly respected. It's not like, Steve just threw his up there, we'll get Glenn to do that too. So go there, reach out to those guys in that group. You throw out a question in there, and it's like, when you put out a call for help on Battle Buddies, you might have 50 or 100 people respond. It's actually amazing. So
yeah, the bigger question is anyone buying a home, whether it's a veteran or not, the place to start is to get approved for the loan first. Then what price range you're at.
So Steve, what type of pre-approval do you suggest? There's a couple different types, right?
If you're talking about the difference between a pre-qualification and a pre-approval?
Yeah.
By definition, a pre-qualification is where you do an online application and you put in that you make $5,000 a month and you've got $50,000 in the bank, and you get an automated piece of paper back that says you're pre-qualified. It might say pre-approved on it, but a loan officer and or underwriter hasn't reviewed your income. Maybe you're self-employed, you make $5,000 a month, but you're only paying taxes on $500 a month. You don't qualify for that. Same thing with as a veteran, you're not approved to buy a home until the loan officer has in their hand a COE, certificate of eligibility, period. And there's certain big box lenders, it's their policy to not look up and get your COE until you're under contract, which to me, that's a sin.
Yeah. There could
That's
be
part-
little hangups. We've all seen it, right? You're like, oh, you're not in the system. Need your DD-214. Oh, you don't know where it is. Oh, your disability is not showing up on the COE, so it doesn't show you're exempt. Well, I'm not going to sit there and be like, sorry, you're getting charged $10,000 for the funding fee because we didn't do our due diligence on the upfront, right? So a really good lender's going to line the ducks up because buying a house is stressful enough. You don't need to worry about the loan as well. You need to be worrying about the carpet and the paint and stuff like that in the neighborhood, not, do I even qualify for this damn loan type thing. So
Yeah. So, and then guys too, there could be conditions set by underwriting. There's all kinds of other stuff that can be, so reach out to these groups. It's one thing to put in a debt to income ratio qualification and get some dirty piece of paper that's just a piece of paper. Then there's something from the lender that's going to be like, yeah, go out, here's your range, bring us back a purchase order, and we'll set up a closing date. Right? I mean, it's an easy way to sum it up, I think.
So the links that are up here for vetted VA and military mortgage directory, that's not one company with a bunch of loan officers that all work at one company or one bank. These are mortgage loan originators from all over the country who have a focus and a passion for serving veterans at different companies, banks, mortgage brokerages, and they're put themselves out there to help and service veterans at local levels. I know all the people that are on mine. Glenn knows all the people on vetted VA. I probably know half the people on vetted VA, if not more.
Yeah, you do.
So where to start with buying a house? Mortgage guy first.
Mortgage guy first. Every time. One you trust. Right?
Yeah, otherwise you're going to spin your wheels. And I'll tell you this, the last thing you want to do, and I'm just using my prices, and so don't get offended, this is California prices, but the last thing you want to do is go look at an $800,000 home, and turns out you should be looking at 600 because nothing's going to match up to that house now when you said you wanted a monthly payment of $3,500, right? And you're blowing your budget or you just can't qualify in general. Our goal is to make sure that you're comfortable, okay? Not because we can do something on paper. It doesn't mean you should do it. You need to be comfortable because we can make a lot of things fly on paper. That doesn't mean we don't want you eating ramen noodles 3 nights a week, right? You don't want to be house poor. Okay, guys? So the biggest thing is getting those ducks in a row, figuring out what your parameters, what sandbox you should actually be playing in to go look at houses, and then hook up with a realtor that also understands the VA loan. There's so many myths out there and things like this, and loans not getting, or offers not getting accepted because it's a VA loan. They're harder to do. So either ask your mortgage professional if they have a realtor that they work with that understands the VA loan, and or just keep searching around. It's up to you who you want to work with. Just make sure that it's for your own benefit.
I'll throw 2 other fun things in there. Number 1, Credit Karma is not your credit score. There's about 15 different credit scoring models, and Credit Karma is not even it's not even a real
monitoring service. Yeah.
The second thing is online mortgage calculators don't work. They don't calculate property taxes, homeowners insurance, mortgage insurance, funding fees right. Again, that's why it's important to get fully approved to know. I've had so many people, and again, I'll use my prices here, Glenn. I've got so many people who are looking at homes online because they don't want to talk to agents or mortgage people at $300,000 homes because Zillow says their payment's going to be $1,200. And then 12 months later, they want to put an offer in, they want to get pre-approved. They come to me and I'm like, okay, $1,200, we're looking at $175,000 purchase price.
Where'd the towel go?
Yeah, exactly. Those are a couple fun things. I think we've nailed a bunch of the questions on here. If there's any others, reach out to Glenn or myself or Chuck. Chuck can direct you as well.
Cool. That's all we got today. Hope you guys enjoy this. This will be pinned at the top for a while, and there's other stuff in the video section and announcement section that you guys might use. And if you want to buy more house to go from 175 to 3, watch the other videos on how to help yourself get a better job as well. So you will make everybody in your life a lot easier if you guys just improve your foxhole a little bit. right? You like that Marine Corps reference? You guys use that in the Marine Corps, Glenn?
Yeah, fighting holes.
Fighting holes. All right. All right. See you guys.
All right, guys. Thank you so much for having me.
All right. I hit stop.